Hey folks, welcome back. It's been a while since I've checked in on Plug Power, and with all the twists in the hydrogen game lately, there's plenty to unpack for Plug. If you're tuned into these clean energy updates with me, you know we're keeping it real. Just the latest developments, market vibes, and what's on the horizon. No advice, just the scoop to mull over. Let's dive in. On the operational side, Plug's been pushing boundaries with their hydrogen production. Their Georgia plant hit a solid milestone back in August, delivering 324 metric tons with 97% uptime and near-perfect availability. That's their tech showing real muscle and reliability. The Gen Eco electrolyzer sales pipeline grew 46% quarter-over-quarter in Q3, with several gigawatt-scale projects teed up for final decisions heading into 2026. Partnerships are stacking up too. In January, they locked in a binding deal with Allied Green Ammonia for 3 gigawatt of PEM electrolyzers for a massive green ammonia plant in Australia. FID is targeted for Q4 this year, which could kick off deliveries from early 2027. Then, in October, they expanded with Allied Biofuels in Uzbekistan for up to 2 gigawatt more, aimed at sustainable aviation fuel and green diesel, bringing their total Allied pipeline to 5 gigawatt globally. These are heavyweight deals that could drive serious revenue as green hydrogen demand ramps up for industries like fertilizers and shipping. Efficiency has been a focus amid the grind. Project Quantum Leap, rolled out earlier this year, is on track for over $200 million in annual savings through supply chain tweaks, workforce optimizations, and streamlined operations. That helped in Q2 with a 21% revenue bump year over year, fueled by rising hydrogen demand. But Q3 brought $177 million in revenue, up slightly from last year, thanks to $65 million from Gen Eco sales, while cash burn dropped 40% in the first half. They bolstered liquidity to over $1 billion with a $431 million convertible notes issuance at 6.75%, plus $370 million from warrant exercises. A long-term hydrogen supply pact with a major gas player through 2030 is cutting feedstock costs, and they've paused DOE loan pursuits to prioritize higher return opportunities. Fresh off the press in early December, they signed a letter of intent with Hyotugen for a 5-megawatt PEM electrolyzer at the Sunrise Green Hydrogen project in France, another step in expanding their European footprint for RFNBO-certified hydrogen. Financially, it's tough sledding with some headwinds. Gross margins dipped to 67.9% in Q3 from 57.6% a year ago, hit by scaling costs and market pressures. They're guiding for $700 million in 2025 revenue, aiming for gross margin break-even on a run rate by year-end. Liquidity's holding, but ongoing burn means execution is key. Analysts note softening equipment demand could cap near-term growth. The stock's been a wild one, true to Plug form. It scraped lows around 0.76 in April, then ignited on hydrogen buzz and those allied deals, peaking at 4.58 in early October with volumes spiking over 400 million shares some days, a whopping 460% run in months. But earnings jitters, dilution concerns from the notes, and sector turbulence dragged it down 25% in November to about $2. Now, in early December, it's trading around 2.16 after a 1.8% dip, with a recent 9.9% surge on a $2.8 million NASA contract for liquid hydrogen supply. Year-to-date through December 9th, it's up roughly 120% from January lows, but still down about 5% overall, outperforming some hydrogen peers in the volatility. At around 3x trailing revenue, it looks cheap on growth bets, but the 1.9 beta screams swings. Analysts are mixed. Median target at $2.50, with HSBC bumping to $4.40 on a buy rating for upside potential, while Wells Fargo holds at $1.50 over burn risks. Looking forward, 2026 shapes up as Plug's potential turning point. Management's targeting positive EBITDA in the latter half through more electrolyzer wins, fuel margin improvements, and those $200 million savings fully online. By 2027, they're eyeing positive operating income. 2028 could bring net profitability. The allied projects with FIDs looming might unleash an order wave, and data center expansions tap into AI's endless energy needs, especially with hydrogen's clean, fast refuel advantages. Tailwinds like ITC extensions could boost material handling too. Risks linger, tariffs on imports, competition or regulatory snags could bite. But with over 8 gigawatts in electrolyzer opportunities across Europe, Australia, the Middle East, and the US, plus fresh deals like NASA and Hydrogen, the foundation's there for momentum if they deliver on milestones. Plug's navigating choppy waters in a hydrogen market eyed for trillions by 2050. But these recent steps hint at building steam. Watch those quarterly reports and deal closures. They'll paint the picture. Bullish on the green energy shift or holding for more proof? Drop your thoughts in the comments, like if this hit the spot, and subscribe for more on energy innovators. Talk soon. Stay powered up.